Hi team, today we are going to do journal entries when a company trades one asset for another. It happens most often with vehicles. You trade in your old car for a new car, but you can trade other things too. You can trade a piece of machinery for a new piece of machinery, or a building for a different building. So it's just good to know how to do this kind of journal entry. So for our first example, Jill Company trades an old truck with a cost of $120,000 less $70,000 accumulated depreciation, or AD, plus $40,000 cash for a new similar type truck. The old truck had a fair market value of $60. Prepare the journal entry to record the exchange of assets by Jill Company. Okay, so let's just kind of chip these away as we go. So to trade an old truck with a cost of 120 means we get rid of the truck. So I'm just going to skip a few lines and then I'm going to do a credit to truck. This is also sometimes called vehicles or some kind of other fixed asset account, but either way you're going to need to do a credit to get this asset off the books. Accumulated depreciation, remember, is a contra asset account. I'll just put that over here. So accumulated depreciation is a contra asset. So it works in the opposite way of an asset account. It increases with a credit. So to decrease it, we need to do a debit. So debit accumulated for 70. Okay, then it says that we give them $40,000 cash, so that means we have cash going out the door. So we're going to do a credit to cash of $40,000. And then it says the old truck had a fair market value of $60,000. Prepare the journal entry to record the exchange of assets. Okay, so the last piece that we need is the cost of the new truck. So we're going to acquire, well, the second to last piece is that new truck. So we need to figure out what the cost of our new truck is. And the cost of the new truck is basically what are we giving up? How much are we giving up? So or the consideration, sometimes it's called. So we're giving up the fair market value of our old truck, which is $60,000. So that's what we're giving them, our old truck, which is worth $60,000, and we're giving them the cash, $40,000 of cash. So we're giving up in total $100,000. So this is the cost of our new truck. This is really what we had to give up in order to acquire the truck. So the cost of the new truck is $100,000. And then the fastest way to calculate gain or loss is just to take the difference between the two debits and credits and plug in the difference. I'll show you the longer way in just a sec. So this is going to give us $10,000. On the credit side, when it's a credit, you can see over here that this is a gain. And you could just call it gain, or you could call it gain on sale of asset or gain on sale of fixed asset. So it can be called a number of things, but just gain is pretty common. Okay, I want to walk you through the calculation to show you how to do the gain really quickly, just to make sure you're comfortable with it. So the first thing you're going to do is take your net book value. I'm going to do it up here so I have a little more space. So you're going to take your net book value. So we're going to take the 120, and let me just format these cells really quickly so that way they're a little bit easier to read. There we go. Okay, so 120 is the cost. The accumulated depreciation is 70,000. So the difference between those two is our net book value, or what it's worth on our books. So the net book value is 50,000. Then you compare this to what the fair market value of the truck is, which in this case is 60,000. So the fair market value is 60,000, and the difference between these two numbers will be your gain or your loss. In this case, it's a gain because we thought it was worth 50,000 on our books, but in the market they're willing to pay 60,000, which is more. So we have a $10,000 gain. So that's the longer, more in-depth way to calculate that number, but it's also just a good double check. Okay, so I'm going to go ahead and scroll down, keep this little chart in mind, but let's look at our other example. So we have one more example. So for this one, it's a little bit different. Jack Company trades in an old truck with a cost of $85,000 less $63,000 accumulated depreciation for a new truck costing $110,000. They receive a trade-in allowance of $15,000 on their truck. Prepare the journal entry to record the exchange of assets. So in this case, they don't tell you how much cash went out the door. They just tell you what the trade-in allowance was. Okay, so let's just go part by part again, piece by piece. So the first one is that we need to get rid of this old truck. And to get rid of that, we're going to do a credit. Skip a few lines, credit to the truck account for $85,000, and then we need to get rid of that accumulated depreciation of $63,000. They tell us in this case the cost of the new truck, which is $110,000. So they tell us like that was the price that we paid. That's what the bottom line said when we signed our contract. We are paying $110,000. Because our trade-in allowance was $15,000, it means that we paid cash of the $110,000 minus the $15,000. So this $15,000 will not go in our journal entry anywhere, but we will use it in a calculation. So the credit to cash is going to be $110,000, the cost, minus the $15,000, the trade-in allowance. So we have to pay them for the total of the truck minus what they knocked off the price because we gave them our old truck. So the total cash out the door is $95,000. So this is a pretty common confusion. People want to use this $15,000 in the journal entry, but it doesn't belong in the journal entry. You'll use it in this calculation only. And then your last step is same as always. You're going to compare debits and credits to calculate your gain or loss. So in this case, you can see that we need another $7,000 on the debit side. When it's a debit, we call it a loss. And I'll just show you how to calculate that again, like the longer way. So your first step is to take your cost, which is $85,000, and then you're going to subtract your accumulated, which is $63,000, and then the difference between those two will give you net book value, or what it's worth on our books. We're going to compare that to what we received, and in this case we received a trade-in allowance of $15,000, so this would be trade-in allowance. And so the difference between those two is, in this case, our loss. So we said it's worth $22,000. On our books, the dealer said, or the person we bought it from, probably a dealer if they're trading us, said, your asset's really only worth $15,000. So in that case, we have a loss. So that's the other way to record our loss. Okay, so same few steps, really. You're going to get rid of the old truck and the accumulated. You're going to put on the new truck, get rid of cash out the door, whatever you're spending, and then record gain or loss between the two to get you into balance.